Uh-oh. Hey, unfortunately, the roofers are here. Fixing the roof yet again. Sandy, good morning. Hello. Oy, oy, oy. I just started the live 2 minutes early, and the roofers, literally, I hit live and they start jackhammering on the roof above me. My building is replacing the roof. It got delayed last week, I guess, due to the weather, and there they go. Happy New Year, everybody. Rick Gilbert. Hello. So, unfortunately, there's going to be power drilling going on during this live. Hopefully, it's not too loud. Maybe I'll close the window if it gets loud enough and annoying enough. I'll close the window. Stock's off to a rough start already. Hey, by the way, for everyone who's in here and you're new, hit that screen a whole bunch of times, at least for like 20, 30 seconds in a row. It brings in more traffic. It says more likes can attract viewers. Keep it up. And it really is for the beginning of the live. If you do it like 40 minutes in, nobody joins. It says there's only one like and 72 people are in here now. So that person, whoever's hitting that screen, it's obviously doing something. It pushes it out to the For You page. Hello, welcome to the 89 people that are now into the most musty live on all of finance TikTok. My name is Kenneth. You can read a little bit about me here. If you're interested in starting your investing journey, it is 2024. It is the first trading day of 2024. Unfortunately, the roofers are here and they're going nuts upstairs. So I'm going to be speaking over the jackhammering and the drilling. If given the opportunity, would you still become a pro wrestler? Yes, 100%. If I get enough followers on social media, I can pull a Logan Paul and I can just show up and win the United States Championship. Ambitious. Good morning. Good morning. I'm going to keep mentioning it because it's annoying, but the roofers are here and they're power drilling right above me. Let's see. Are there any oversold companies from 2013? I assume that's a typo, that you see rebounding in 2024. Yeah, actually, I had a video on the biggest losers. Let me see if I can find it. Hey, ambitious. Thanks for the heart. Let me see if I can find the... Let me see if I can find the video that I posted on the biggest losers of 2023. Okay, worst stocks of 2023. Here's my video, and we can go over it and see what stocks I talk about here. One of the worst performers was Etsy. Oops, I hit a button. Damn it. Let's see. How do I use the computer here? Oh, I hit the wrong button. Okay, I got it now. Etsy. Let's take a look at Etsy. Etsy last year was down quite a bit. There's a lot of stocks. Hey, Mr. Gill, I don't go live with people I don't know. Goodbye. Hey, 426 people in the most must-see finance live on all of TikTok. Thanks so much, everyone who's here, who's joining, who's following. It is 2024. This is the place to be if you want to start your investing journey. This is the place to be. Etsy, last year, down almost 30%. That is not great, but that means that there's a potential buying opportunity. Etsy was doing well until COVID, when everyone jumped on Etsy and everyone had an Etsy shop and Etsy stock skyrocketed and got way overvalued. Now Etsy has come back down to a normal valuation. Let's see what else was on my list. Oh man, I did it again. I keep hitting the wrong button. This is really annoying. Let's just see. I'm just going to fast forward through and make my own little list. This is really annoying. Using the computer for TikTok is a pain in the ass. Okay, Etsy, Peloton. I would stay away from Peloton. Walgreens Boost Alliance, that's one that's on my list for this year. Chewy, that's another one that went way down in 2023. I'm going to take notes on these so I don't lose them. Dollar General is another one that had some little bit of bad news in 2023, but I saw that as temporary. I think Dollar General is another potential buying opportunity. ChargePoint, highly speculative. I don't know if I'd put much money into ChargePoint. I'm watching my own video. Okay, so those are the ones that we had. And Etsy. I think a lot of these companies could turn around in 2023. And let's see what I'm missing here. Do your own research guide. I got you. It's on my website. I can't put the text here on the screen. I know it sounds like a bait and switch or clickbaity. Like, ask me about the guide. Why don't I just put it here? Every time I've tried to put a link, even though it's not clickable, but just to spell it out, .com, The lives get like 3 people in here. Seriously, there's almost 300 in here right now. There were almost 500. If I put text, it's gone. So I'm gonna type out my I'm gonna reply to you with my name, and you are just gonna add .com to it. Kenasuna, that's my website. It's just my first name and last name. Kenasuna.com. Click on the menu. If you're on your phone, it'll be in the menu down here. If you're on your computer, it'll be up here. I can't believe I have to tell people where the menu is still, but some people, I say go to my website and they go, look, I couldn't find it. It's in the menu. So click on the menu wherever it is. I have 2 free resources now. One is a resource guide, which is every website that I use to do my own research. Last year, 4,000 people downloaded the guide. 4,000. If I had charged $10 per download, I could have made a lot of money. But my goal isn't to make money off of you. The other guide that I just posted yesterday, Paul Carey, I got you. The other guide that I just posted last week is a fundamental analysis template, and I put 2. So you can compare 2 stocks from two similar sectors if you're interested, or you just use the one side if you're looking at like evaluating one company. Books to read. Click on the link tree in my bio. So click on my name up here at the top of the page. It'll take you to my home page here on TikTok where you can see like a little about me. You can see all my playlists, and then you'll see all my videos. There is a link. It's, for some reason, TikTok does not like when you put clickable links. So it'll say like, warning, this is a weird website. Ignore it, or you can go on my Instagram account and click, and it'll take you right to my link tree. There's an Amazon storefront in my link tree that has all the books that I've used, that I recommend, that I know other people really, really speak highly of. Let's see here. TSLY. If Tesla can remain a very volatile stock, which I'm personally convinced that their extremely volatile days are a little bit behind them, then TSLY is great. If you want to sell covered calls to generate a little income on your Tesla shares, you need 100 shares to do that. And there's only one problem with that. You need to have 100 shares. And 100 shares of Tesla is quite expensive. So if you own like 20 shares of Tesla and you want to generate a little income selling covered calls, you can't. Well, now you can thanks to TSLY. The risk is obvious. If Tesla stock goes down, TSLY goes down. If Tesla stock trades sideways, or we have a recession or a flat market overall, the premium that TSLY is charging for their contracts will decrease. So the dividends could get less. So right now you see TSLY has a projected dividend of 76%. That's insane. And it's not likely that it'll remain that high. In fact, even if we go on and look at their dividends per month, you can see that it's steadily getting, the payouts are getting smaller and smaller. So in January of last year, it was 99 cents. Then it was 90 cents in February of last year. Then it was 90 cents in March. Then it was 82 cents in April. Then it dropped all the way to 44 cents in May. Went up to 80 cents. So you get the idea. It's up, it's down, it's crazy. It's all over the map. Then in July, it hit an all-time high of $1.07 per share. Now, if July was your first time having TSLY in your portfolio, you might be thinking, oh my God, I made $107 this month if you had 100 shares of TSLY. If you had 1,000 shares, you made $1,000 in TSLY. But then the very next month, it drops to 83 cents, and then 58 cents, and then 57 cents, and then 58 cents, and then last month was in December was for 60 cents. So don't look at TSLY like it's a guaranteed income. It is guaranteed income, but the amount will change. And it'll get way worse or lower if Tesla stock becomes less volatile in the future, which is entirely possible. DraftKings, I own. I can read you off a 1-year price target. This is according to analysts, and we know that analysts are correct about 30% of the time. It doesn't mean, by the way, that they're the ones who are wrong are like flat out wrong. It just means the price target for DraftKings is $42.05. So in a year from now, the analyst who said $42.05, if DraftKings is $41.97, he's technically wrong. But it still went up. It just didn't hit that exact number. I don't use analysts as guarantees. It's just something that guides my process a little bit more. DraftKings is currently $34. The 1-year price target is $42. That's a 21% move. The thing that gives me a little bit of peace of mind is that there are 28 analysts covering DraftKings. There's not 2. If there were two and they both said buy it, I'd be suspicious. And if there were two and they said sell it, I'd be suspicious. I want to see more analysts coming in, as many as possible. And here we've got 28. Of those 28, 0 give it a sell order. 4 give it a hold, which means if you own it, you just hold it. You don't buy more, you don't sell it, you just hold. And 24 analysts recommend you buy DraftKings stock. The highest price target for DraftKings is $50 per share. Again, not a guarantee that it'll get there, but VOO is down today. Yeah, the markets are down today, so VOO is going to be down. Not a big deal. Nobody buys VOO unless they're trading it. Nobody buys VOO thinking, about the next 2 months. They buy it thinking about the next 20, 30 years. Thoughts on the market slide today, Jake? Here are my thoughts. Last week, the S&P 500 hit all-time highs. Anytime anything hits an all-time high, it's going to pull back. More likely than not. Obviously, there's no guarantees in the market. Something could hit an all-time high, and then everyone swarms in to buy more of it because they think it's going to go higher. In this case, sorry. Roofers are here. Fixing the roof, finally. In this case, though, we've got a lot of stuff going on in the world. Ukraine and Russia, Israel and Gaza, tensions in Asia, always. The Chinese economy isn't doing so great. Our economy is, some people think it's doing great. Other people think it sucks. We have an election coming up. There's a lot going on right now in the markets. So S&P 500 hitting an all-time high, anytime that happens, my first thought is people are going to come and take their profits a little bit. And they are. S&P 500 is down 28 points. It's like 0.61%, so it's not even down a full percent. It's not cause for concern. Although we do have a lot going on this year. So if you're a new investor and you're thinking about your journey, tread slowly. Where do you get your analysis? My resource guide. It's on my website, kennethsuna.com. It's just my first name and my last name. Go on my website. I have every single website that I use, whether it's news, calculators, fundamentals for earnings, companies like that, like looking over companies' fundamentals. Every website is there. It's kennethsuna.com. It's my first name and my last name. Click on the menu. Every website that I use is there. That'll help you begin your journey as well as an investor. You're saying, where do you get your analysis? CONY, it's the same thing as TSLY. Coinbase, I think, is going to become more volatile in the foreseeable future, especially if there's a recession. People always rush to other kinds of investments. If there is a recession, crypto could be one of those. Add into that, you have these new crypto-based ETFs that are coming onto the market, the Bitcoin ETF, which will create more demand for crypto, in my opinion, because you've got this whole sector of the economy or of our society who thinks crypto is a scam. They think it's a joke, and when they see the big hedge funds now get into it, they go, okay, if BlackRock, if JP Morgan, if all these respectable institutions are buying crypto, maybe there's something to it. And so you will see, number one, people maybe buying into these funds. Number two, you'll see people maybe opening Coinbase accounts and starting their own crypto investments. Now that they know, hey, if the big hedge funds are getting into it with all their lobbies and all their political sway, maybe this crypto thing is here to stay. Now I'm ready to invest. So I could see crypto moving higher. As a result, Coinbase could move higher. And if Coinbase moves higher, by the way, Coinbase hold on, we got to read this number out. Coinbase last year up 400%. 400% in 1 year. That is absurd. Do I expect it to go up 400% this year and 400% next year? Absolutely not. However, it could still move a little bit higher. The analysts seem to hate it. They have an average price target of $105 with a mix of 7 sells, 6 holds, and 7 buys. That's of the 20 analysts covering the stock. That gives it an average hold rating with a 1-year price target of $105. I'm going to go ahead and disagree. It is their highest price target is currently $200. Their lowest is 39, and like I said, the average is 105. But CONY, the yield max covered call ETF, if Coinbase can continue with that volatility and can continue moving higher, that dividend could go higher as well. Will you be getting into the Bitcoin ETFs when they become available? No, I already own my own Bitcoin, so I don't need to own it through an ETF. What's happening to the stocks in the past couple days? Jeff, S&P 500 hit an all-time high last week. Profit taking, plus we're looking at like a lot of stuff going on globally. Russia and Ukraine still fighting. China, Israel and Hamas or Gaza still doing that. China, Asia tensions are always kind of there. The economy in China is not so great. Here, our economy is mixed. Some people think it's great. Some people think it's terrible. There's an election coming up. There's a lot going on in the world right now. So we hit an all-time high, profit taking. What would be the best way to invest $10,000? Check my how to invest by amount playlist on TikTok. I've got 2 videos in there on how to invest with $10,000 and 1 how to invest with $1 million because somebody asked me. Thoughts on SLI and LICY? I've never heard of either of these. Oh, Standard Lithium. Okay, yeah, Standard Lithium I know. It's a penny stock. LICY is Li-Cycle Holdings. So Standard Lithium has a downgrade warning. Their grades are terrible. It's a penny stock. It's down 29% in the last year. Since going public in 2018, it's up 148%. In the last 5 years, it's up 186%. I think people are just buying a penny stock that's in lithium, hedging their bets that all lithium stocks will go up as more electric vehicles come onto the market. I would only put in what I was willing to lose. Same with Li-Cycle. I've never heard of this company, but I'd only put in what I'm willing to lose. It's 61 cents. Don't risk your money. Hormel Foods. Hormel. Hormel I think is generally known for having cheaper food, which could do well if there's a recession or increased food prices. I don't know too much about their stock. They have a dividend of 3.5%, which is pretty solid. They've got 57 years of dividend growth, which is incredible. So as a dividend company, they're backing up their dividend with 57 years of data. In the last year, it's down 28%. In the last 5 years, it's down 23%. In the last decade, it's up 43%. I feel like there's probably better companies out there. Unless you think that Hormel is poised to do very, very well in the foreseeable future because of their cheaper quality food, which people might rush to if there's a recession. The analysts don't like it. It's $33 currently. It has a 1-year price target of $30. Let's see what I'm missing out on. What is in? That sounded like something came through the ceiling. What was that? These fucking roofers, man. I'm really sorry. It's going to be annoying on this live today. They're fixing the roof in my building and they're going crazy. Toyota Tundra guy, what is the sector to watch this year in your opinion? In my opinion, the sector to watch this year is going to be tech, because I think we could see tech stocks go down a lot, making it a tremendous buying opportunity. Look today. Look at what's leading the way today. Amazon is down $2 or 1.75%. DraftKings is down 2%. Netflix is down 2%. Nvidia is down 3.4%. Facebook or Meta is down 2.8%. Apple is down 3%. The tech stocks are getting hammered today. Even Google is down 1.5%. Coinbase is down 3.5%. If there's a recession, usually it's the tech stocks that get hit the hardest first. And the stocks that do the best are the companies kind of like Hormel that are proven, they have a proven track record. Doesn't mean that they won't go down at all. It just means it might go down a little bit less, especially because they have those high dividends and the history of high dividends to back up their stock. So yeah, everything can go down in a recession. The idea though is that you're finding like recession-proof stocks, which are their downside risk is a little bit more insulated. Tech, when there's a recession, they get hit really, really hard. So you're asking what's the sector to watch. I'm sure you were asking what do you think is going to go up this year. I think tech is going to go down this year, making it the sector to watch. I'm going to be buying tech as it drops. I mean, if it goes lower from here, I'm going to be flying in. And look what's up today. Altria. Altria with their 9% dividend is up 2%. So while all the big tech stocks are down in the 2% range, Altria is up, probably because people are going to be rushing into safer dividends, not covered call dividends. People always say, when I make a video on dividends, they say, why didn't you mention JEPI or JEPQ or something like that? Those dividends come with a lot more risk, which is why I'm not mentioning them. They're also not dividend-paying companies. They're dividend ETFs. They're selling covered call ETFs. That's how they're generating their dividend, is what I mean to say. They're not McDonald's or Coca-Cola with a dividend. They are selling covered calls to generate income to pay a high dividend. If the markets go down or if the markets are flat, those dividends will decrease dramatically, and your initial investment will also decrease dramatically. So in times of recession, I mean, let's see. I'm just curious. Dollar General up 2% today. What else is up here today? Coca-Cola up 1%. Pepsi up almost 1%. McDonald's kind of flat. What are some other dividend-paying companies? 3M up 1%, and we already know Altria is up 2%. So this is kind of telling me, at least temporarily, early on in the year, people are putting their money into dividend stocks this year, which if you watched my video a couple days ago on the money moves I'm making for 2024, my goal for 2024 is to build out my dividend portfolio. I've already got all the tech stocks I need. People say, well, what are you buying next? What are you buying next? I'm not buying anything right now. I'm in wait and see mode. We just started the new year, and I'm going to be building my dividends. That's my goal for 2024. Buy GD. What's GD? Oh, General Dynamics. Also up a little bit today. Aerospace and Defense. Thoughts on MicroStrategy? I don't really have any thoughts on MicroStrategy, although people ask about it every week. MicroStrategy. It's MSTR. The stock is up 12% today, which is insane. Someone told me they own a lot of Bitcoin, which probably explains that. The Barclays betting against Apple. No surprise. People are always betting against Apple. It's one of the largest companies. It is the largest company in the world. $2.9 trillion company. Microsoft is $2.7 trillion. What's Amazon? Why won't it let me type in Amazon? $1.5 trillion company. Apple's whole thing with the watch getting banned, I think, is temporary. I think it'll be fine long term. They're going to be rolling out their headset. I think the companies who bet against Apple want to own it at a lower price. So they short it, they bet against it, they write negative articles, they downgrade the stock. I don't know. I mean, let's see here. Apple. Let's go back to a 1-year chart. It's entirely possible... It's entirely possible that we see Apple could get into the 170s. I mean, that's their next level of support. The stock kind of hovered in the 170s several months ago. Looking back, let's see, in September of 2023, October, it was in the 170s and the 169s. I would keep an eye on that level. Like I said, I think tech is going to get hit pretty hard this year. It's an opportunity. I'll be buying tech like crazy. I know I said my plan was to load up on dividends. But plans change. And if tech gets hammered hard, tech is one of my largest holdings. I'm going to be buying tech like crazy. Do you trade as a full-timer? Yes, Anna, I am a full-time stock trader. At least I have been for the last 13 years. This last year, I went more focused into TikTok as a content creator. I get no less than 20 DMs a week from people on each app. So we're looking 40 DMs a week on TikTok and Instagram combined of people who are saying, hey, I'm new, what do I do? And I respond to everybody. It is a full-time job making the videos, responding to people. So that's what I do now. But I've been a stock trader for the last 13 years. Did you sell anything to reduce tax liability? Yeah. Basically, at the end of the year, every year I do, I'll look through my losers and I'll look at the charts and I'll read the analyst reports and I'll make my decision based also on how much I've made. So if I have a really strong year, that's when I sell off a lot of losers to bring down my taxable income. If I had a slow year, I didn't make a lot of money like last year, I'm not going to sell off a lot of stuff. I'll save it for the good years because I know I'm going to have good years. And I'll reserve it for that. But I did sell some losers. AMT is a nice dividend. And let's take a look at AMT and see what it's doing today, because if it backs up my strategy or my theory that dividend stocks are up today. Yeah, American Tower. Duh. Yeah, I know American Tower. I talk about it all the time. American Tower is up 0.5 percentage point or thereabouts. Realty income is up 1.14%, backing up what we were saying about dividend stocks going up this year. If interest rates go down, our REIT's going to start looking good. I think REITs are going to look good in any fashion, because when the REITs when the interest rates go up, people are still trying to buy houses. When the rates come down, everyone thinks there's going to be a housing crisis and the housing prices are going to drop. I disagree. When the interest rates drop, like they're suggesting they will this year, home prices are going to skyrocket because everyone's going to rush in to buy a house. SCHD or SCHG as a long-term play. SCHG is the Schwab Large Cap Growth. Let's see. SCHG is up 264% in the last decade. 46% of their holdings are in tech, and they have a very, very low expense ratio of 0.04%. Their top 10 holdings are Apple, Microsoft, Amazon, Nvidia, Google, which is Alphabet, Meta, Tesla, Alphabet, Google's Class C shares, Broadcom, and United Health. You're saying SCHD or SCHG as long plays. I think probably both. That way you're getting the exposure to the growth and the exposure to the dividends. If like my theory is correct that we're going to see a dividend year, where the dividend stocks go up and the tech stocks go down, and of course I could be wrong, then I would personally go heavier into the dividend. So if your portfolio was going to be a 50-50 split of SCHD and SCHG, so dividends and tech, maybe you do 60% dividends and 40% tech because we're expecting tech stocks to drop. Or you reserve some of your capital, and instead of buying the tech stocks now, you put that money aside, not into another investment, just in maybe a high yield savings account, so you can deploy that money quickly. If my theory is right and we see tech stocks kind of pull back a little this year, then you can deploy that money at a discount. Liz Vegas, thank you for the follow. CERM says we will see a pump run before the crash. Maybe we already have. I mean, the S&P 500 hit an all-time high last week. Couldn't that be considered the pump? Nobody knows. Oh, crypto crash. Largest market crash incoming. I don't think so. By the 7th, the stock market crash 65% by the 7th. That is a bold prediction for a few days away. Anna says hello, by the way. Anna, hello back. What are you buying today? Nothing. The year just started. I'm not buying anything. Is the S&P 500 one of your long-term investments? Yes, and it probably always will be. BK Rosser says, what are your favorite natural resource companies? I don't think I really have any, to be honest with you. What did I miss here? Wall Punch, can you talk a little about a deflation strategy? Like in terms of like investing in gold and stuff like that. Deflation, well, I guess that's kind of what we were talking about. Deflation, maybe people would be rushing into the dividend stocks if they're going to see a slowdown in like tech and volatile investments, speculative investments. Maybe people rush more into gold, maybe Bitcoin, maybe dividend stocks. Cruise Clan, any quick idea you can give me for a 50-year-old just trying to leave something behind for my children? Yes. Cruz, when you leave this live, go click on my profile. Just click on my name up here. It'll take you to my homepage. You'll see my photo, you'll see my followers, you'll see a little bio, then you'll see playlists, and then you'll see all my videos. Swipe through the playlists, look for stuff like, look at the investing by age playlist that I have. I think there's one in there for people who are 50. Look at that video, watch that video. Start a portfolio in things. If you're leaving it behind for your kids, look into tech-based ETFs like, what's the tech ETF? VGT, QQQM. Look at tech ETFs because tech goes up over the long term a lot more than the more boring stuff. So if you were saying for me as a 50-year-old, I'd be saying dividends and index funds like S&P 500. If a 20-year-old said, what do I invest in? I'd say dividends and S&P 500, but a smaller part of the portfolio. Because you're in your 20s, in this example, a lot of tech. Go heavier in tech and high-quality companies. Since you say you're 50, but you're leaving it behind for your kids, I would go personally a little bit more tech. Anna says, an election year tends to be up market. Indeed, it does. I love your videos, how much you need to spend in order to get certain amounts by the divvy. Thank you. Cruz, I'm glad you like those videos because a lot of people hate them. A lot of people hate those videos. And the whole idea behind here's how to make $20,000 a year from dividends is to show you the benefit of long-term investing. That's the whole point of the video. I'm not saying, hey, everyone has $900,000 or $200,000 just sitting around. People who are capable of critical thinking watch this video and they go, I don't have that yet, but I have $10,000 or $2,000 or $400. I'm going to start now and slowly change my spending habits away from rampant materialism and more towards investing. And maybe my 20 shares will become 60 shares. And then a few years from now, maybe it'll be 200 shares. And I'll be reinvesting my dividends. So 200 will become 203 and then 210. And then I'll get a promotion and I'll be able to invest more. I'll get a second job. I'll be able to invest more. You have to have that long-term approach. Thank you for all you do. Appreciate the info. Jeff Rascal, thank you so much. I appreciate it. Should I sell some Apple and buy a good Russell 2000 ETF? I already have SCHD. I can't tell you what to do. I'm not a financial advisor, so I cannot tell you to sell Apple. But I'll put it to you like this. I have Apple. I'm never selling it. Anna says, housing will still not drop. I agree with what you're saying. Recession 2024. I don't know. Last year they were saying recession 2023, and the year before that it was recession 2022, and then we had the COVID kind of correction or recession or whatever it was, even though it was temporary. People are always screaming recession. I'm not in the business of making predictions. If I say, yes, a recession is coming in 2024 and it doesn't, then people are going to say, that idiot said it was happening and it didn't. What a dumbass. And if I say there's no recession and then we have one, I'm an idiot. So my approach is just consistently be investing. If you think that a recession is likely, we're not out here trying to time markets or anything like that. We're not sitting here saying, I'm waiting, like the guy in the comments who said January 7th, it'll drop 60%. How do you know that? I'm not waiting for January 7th. I'm not waiting for a recession in 4 months. Nobody knows. If I'm looking at things and I'm a little bit shaky, as I am, I think tech stocks are going to pull back this year, then I'm going to reserve more capital so I can deploy it later. When later? I don't know. There's no set date. Maybe Apple goes to 175 and I buy it and then it drops to 165. It doesn't matter because 20 years from now, I'm going to be saying I bought Apple at 175. I'm not going to be saying if I had waited 2 more weeks, I could have got it at 165. I think Apple is going to be higher in the future. So I'm not trying to time things. I'm just going to keep an eye on the markets. If we see big down days, like really big down days, I'll start adding a little bit more. Thoughts on Optimus for Tesla? I don't know what that is. Kind-hearted, wanted to wish you a Happy New Year's. Kenneth as at an appointment, wanted to say hi. Thank you. Happy New Year to you as well. Jerry says, what is your average hold time when trading? So typically I'm a swing trader. That's what I've done for the last 13 years. Although when Trump got elected and the market volatility went nuts, you add in COVID and all of that, I switched to day trading. So predominantly I would day trade. I just didn't feel comfortable with everything going on to hold a trade for more than a few days. especially over a weekend when something crazy could happen. So I was day trading. Typically, as a swing trader, add in a strong market, which maybe we have, maybe we don't. I could hold a stock 2-3 weeks, a month, doesn't matter. I'm also moving in and out of different trades, so I don't just have the one trade. Usually, I try to have no more than 6 trades going at a time. It's just easier for me to manage. So it could be anywhere from a couple days to a few weeks would be my average. Although I've had trades that I've held for like 4 months. Do you have any credit card companies or payment processors? No, I don't invest in any of those. Do I? I don't think I have like a PayPal or anything like that. I do like PayPal stock and I like Visa, but I don't own either one of them. All right, let's see what I missed. How to dividend invest. Jerome, go watch my Investing for Beginners playlist. You need to open a brokerage account. If you want to invest for retirement, you need to open a Roth IRA. I have videos on all of that. MasterCard's another good one. MasterCard MA, right? MasterCard is up a lot over the last last year, MasterCard went up 20%. In the last 5 years, 121%. In the last 10 years, MasterCard went up 400%, which is crazy to me. But so for Jerome, you want to open a Roth IRA if you're investing for retirement. If you want that money and the access to the dividends now, open an individual brokerage account, and then check my dividend playlist, check my real estate investment playlist, check my my ETF playlist. Is a lot of dividend ETFs, like SCHD is a great one. If you don't want to buy individual companies because it's too much risk, go the route of the index fund. Just Watching says, I love your work. Thoughts on full stocks versus real estate? I like both. It depends on what level of real estate you want to invest in. For example, you might want to you might want to buy property and be a landlord and get phone calls at 2 a.m. saying the oven isn't working or the toilet won't stop flushing. There's a couple who lives down the hall from me, and they have an apartment that they rent, and a new woman just moved in, and the woman is like, they trashed this place. And so the landlord is now having to make repairs and clean up, like deep clean. Like they really were dirty. It wasn't like they, like spray some Lysol and you're good. They trashed the place. The oven broke. The fridge was broken. The microwave needed to be repaired. They broke things. As a landlord, you have to deal with that. So maybe you don't want to deal with that. Real estate investment trusts are a great way to give you exposure to real estate and make money through your investments in real estate. I don't have an or. For me, it's both. Anna says, you are so refreshing. Thank you. Show all to my 17. I don't know what that means. Antonio, do you trade crypto? No, I don't really trade it. I do invest in it a lot, though. I have a lot of crypto, Bitcoin, Ethereum, HBAR, VeChain, Matic, XRP. I have a bunch of crypto. My largest holdings in crypto are Bitcoin and Ethereum, and then everything else is small amounts. Laughing my ass off says, hey, Kenneth, hello. Let's see what I'm missing. Would you still buy SCHD over 75? Yeah, I mean, as far as my investments go, if I'm dollar cost averaging, I'm always buying it. I don't care if it's higher or lower. I'm going to be buying. If I'm dollar cost averaging into something on the first of every month, as an example, today would be the first of the month. Technically, it's the second, but it's the first trading day. I don't care if it's $76. I'm going to buy it. Next month, if it's $72, I'm going to buy it. And maybe I buy more. The next month, if it's $69, I'll buy more because it's quality. I think it's quality. If I was in a high-risk investment and it was 76 and then 70 and then 60, maybe I'd be going, I don't want to throw more money into a loser. But SCHD, I don't care. And if it goes to 82, I'm going to buy more. And like we've been talking about on this live, my theory for the year is that we're going to see tech stocks take a little bit of a hitting or at least pull back a little bit. Hitting. I meant to say beating. We're going to see tech stocks maybe pull back a little, maybe. And dividend stocks might go up as people look to higher yields, especially if the Fed is cutting rates. People are going to be looking to dividend stocks instead of higher yield savings or CDs, which could pull back. They might not, but they could. So people are going to be looking to dividend stocks. Tech stocks are already getting hammered today. Let's take a follow-up here and see. Hello. I want you to go away. Yeah, Apple is down 3.6%, Meta is down 3.5%, Nvidia is down 3.7%, Netflix is down 3%, DraftKings is down 4.5%, Shopify is down 5%, Amazon is down 2%, Palantir is down 2%, Rivian is down 10%. Yikes. They had bad earnings though. Google is down 1% or whatever, but look what's up. Altria. Altria is up today. The dividend paying stocks are moving today. Probably because of what we talked about here, that people are going to be looking towards high yield dividends in the event that a recession is coming in 2024, which is always possible. What indicator do you use to know when to take a profit if a stock is dropping? Relative strength index is what I use to determine whether I should take profits. I'll also look at volume. And I'll look at Bollinger Bands. If the stock is breaking out of the... if the stock breaks below the support line on a Bollinger Band, which is the bottom of the 3 bands, and I don't go live with people I don't know, goodbye, then that is an indicator to me that the stock could be pulling back further. If it's on the negative side of... Let me just show you... how do I do this here? Let me just show you... I'm going to move my plugs and all of that. Flip camera. Okay, so this is the Apple chart right here. These are the Bollinger Bands, the red, the green, and the purple. And you can see that Apple is on the positive side of these Bollinger Bands. This happens to be I think it's a 1-year chart. It's a 1-year chart, but it is on the positive side of this 20-day moving average, which is the green one in the middle. As long as it's doing this, I'm not selling the stock. But when I see a breakout on the downside, like it does here, where it breaks below, if it's on the negative side of the 20-day moving average, that's an indicator that I should be gearing up to maybe take a profit. Not necessarily for Apple, because I believe in Apple and I'm holding it long-term no matter what, but this is just an example. If it's on the negative side of this 20-day moving average, I'm going to be thinking about a potential sell order. If it crosses below, like it does here, it breaks out to the downside here and here, then I'm definitely thinking, oh man, this stock could go lower. So if it's a stock that I'm trading, not Apple. Again, Apple is only an example. I'm just using it for the chart. If this was an investment that I was kind of iffy about, and I saw this, I'd be thinking, oop, it might be time to take a profit. And look what happened. It was 179. When was this? In August. And a few months later, it was 168, so down almost $11 in just 2 months because it broke out. So this is the indicator for me. And sure, short term, it pops again, but trading is a little iffy. I mean, down here you can see relative strength where it gets oversold right here. This might be the point where I decide to buy back in and hold it for a quick trade. But anyway, that's more than you asked. That is what I would look at if a stock was dropping and I wanted to take in some profits. See what I missed. Jeff Rascal, I have to jump off, but thank you. Thank you, and have a good day. What about AMD now with minus 6.2? Is AMD down 6%? Is that what's happening? Let me look. Well, now it's down 5.7, but, a 5% drop, to me, buying the dip isn't 5%. Stocks, especially volatile ones like tech, can drop 5% and pop right back up the next day. I don't look at when people run out and say, buy the dip, buy the dip. Down 5%, down 6% isn't enough of a dip for me, because these volatile tech stocks can go down 20% in no time and then come right back up. And if you're buying every dip at down 5%, you're going to run out of money really quick. So I wouldn't worry necessarily about, it's down 5%. However, if you are dollar cost averaging into the stock and you do so on the first trading day of the month, which happens to be today, then yeah, you're getting AMD at a discount of 5, almost down 6%. That's lucky. Next month, it could be up 8% on the first of the month. But if you're building a position over the long term, it doesn't really matter. Bus driver, thank you for the follow. It might go up, it might go down. Who cares? Do something else. Okay. Ambrosia Salad 007. Good username. Is WWE the same as TKO? Yes, WWE was WWE. Now they have merged with TKO. I'm sorry about the roofers. They're going to be jackhammering all day. Do you buy back covered calls? Bruce, I invest in covered call ETFs, if that's what you mean. Ambitious, happy 2024. Happy New Year. And his name says, what do you think about JEPI and JEPQ? I like them. I like them both. I have playlists on covered call ETFs that you should check out. I think I even have playlists or videos in that playlist where I compare JEPI to JEPQ. Is partnering with friends into real estate a bad idea? I would say yes. There's just too many varying opinions and money. With friends and money don't mix. In my opinion, friends and money don't mix. Maybe you go halvesies on a property with a friend, or maybe you split it 4 ways between 4 different friends, and then one friend wants to renovate the house, and the other says, let's generate some income before renovating the house, and the third friend says, I don't have any money to invest to renovate anything anyway. Maybe one of the people says, I need out, I need money for something else, and the other 4 have to scramble to buy that third friend out. It's just too much risk, and it can sour friendships really quickly. So I would never buy a property with a friend. It just seems like a recipe for disaster. I'm sure people do, and I'm sure that there have been success stories, but those people probably have enough cash and they know each other enough to feel comfortable that, there aren't going to be money problems, or they're not going to fight about renovations. But I wouldn't do it. PLTR, yes, I like Palantir. I own Palantir. Is your playlist on your TikTok page? Yes, Jerome, it is. On TikTok, you would click on my username up there, Kenneth Suna, or you would search for my page, click on my profile or whatever, and it'll take you to my homepage where you'll see my photo, my bio. You'll see all my videos down at the bottom, and then you'll see a playlist bar at the top, or kind of in the middle of the screen, and you can just swipe sideways through all my various playlists. 3M is another great one we looked at earlier in the live. It is up 0.5%, a little bit more than 0.5% right now. Okay, what did I miss? That's why you got to have a contract. Yes, invest in wrestling, WWE. Yes, that's what this one is down here. It's pro wrestling. People always laugh at WWE when I say invested in WWE. Over the last decade, WWE stock outperformed Apple. In the last 10 years, WWE was up 950%. Apple was up like 980%. 920%. It might be even less now because the stock has pulled back. Yeah, right now, over the last 10 years, Apple is up 875% to WWE, which is no longer listed, but it was up 950% at the time. And his name has followed after asking your question, so thank you, I appreciate. Anna says, what do you think of? Of what? A lot of new followers in here today. Thank you so much. This is the goal here. More people investing in 2024. I like this live today. I think there's a lot of good stuff talked about, so I'm probably going to save it and post it on YouTube for anyone who has missed it, because I think it's a good one. We are sitting at 87 new followers on the live this morning. So for the 87 of you who are still in here, thank you so much for following. What type of trading do you recommend for beginners with a small budget? Paper trading. Don't trade with real money. Don't trade with real money. Or if you do, trade with nothing. Trade with, hey, 88 new followers. Thank you so much. Limitless Claire. Thank you for the follow. As a new trader with a limited budget, your goal isn't to make money. Your goal is to learn. So if you make a trade, you buy 10 shares, you put in $50, $100, and the stock goes up 13%, don't sit there thinking like, damn it, now I'm going to start trading with $10,000. You just got lucky. You're new. Your next trade could be down 30% for all you know. And you might not have the knowledge or the confidence to pull the trigger and cut that loss because you're new. So Don't worry about making money. You're going to have big winners. You're going to have big losers. Get in the habit of cutting your losses. Get in the habit of taking your profits. Trade for a while till you get really comfortable with it. Paper trade. If you paper trade, that means using fake money through apps like TD Ameritrade's Thinkorswim. Trade with what you plan on really trading with once you're trading. So don't trade with $1 million if you're going to trade with 10,000 or 5,000 or 500 because you're going to have unrealistic gains and losses. So trade with what you plan on trading with. With paper money, focus more on the percentage. Focus more on, don't worry about making money. Just focus on the percentage. Go on my YouTube channel. I have two playlists on trading stocks that will definitely help you. Go into my link tree on TikTok, which is on my bio here on TikTok. Click on the link tree. Go on my Amazon page and buy the book on trading stocks by Nicholas Darvis. It's the only book I ever read on stock trading. Buy that book. It's this big. You'll read it in 2 days. And it's historically really, really cool too because he talks about trading stocks in the 1950s and 60s before smartphones, before the internet, before computers. So historically, really interesting as well. And then watch my technical analysis playlist. I have some here on TikTok too. Thoughts on dividend yield versus underlying stock growth, like 4% dividend, but 3% growth per year. I love it. The companies that pay the highest dividends aren't going to be growth companies anymore. You know, they're the companies that have already had their growth. Now they've expanded. They're everywhere. They've saturated the market space with a product that people love or are addicted to or they have to use, like oil and gas. You know, I don't think we're going to be seeing many more new gas stations pop up. You know, there's gas stations everywhere. I don't think we're going to see a Coca-Cola, for example, come out with like a revolutionary new product that changes the world. You know, maybe they come out with Coke Zero or maybe they come out with a new drink. It's everywhere and it's stable and it's established. That's why they're able to give their profits away in terms of a dividend because they don't need to grow and expand anymore. So I wouldn't be looking at dividend companies like I have to have big growth. I'd be looking at it as a part of my diversified portfolio for income, and I love it. Forex, I don't trade Forex. Sorry, I'm not the one to ask. I've got a contract. What do you think about investing in high dividend ETFs? High dividend ETFs, I guess it depends on what you're talking about. Yes, Bitcoin as well is in my portfolio. When you're saying, so this is for Jamie who says, what do you think about investing in high dividend ETFs? Are we talking about like SCHD or are we talking about like JEPI or JEPQ, like covered call ETFs? Because there is a difference. Margot, what do you think about Pfizer? I like it. It is on my wish list for 2024. I'm not going to be surprised. I will be surprised. Yeah, I figured it would be up today. Like we've been talking about in this live, I think 2024 is going to be the year for dividends. And no surprise here, Pfizer up 4.7% today. I love it. I want to buy it. I probably will start a position at some point this year. And I'm not waiting for a certain price. I don't care. Pfizer would be a company that I would plan on holding if I bought it for the next 30 years. CLF. Let me look at that one really quick. Cleveland Cliffs. I've never heard of it. It is a steel company. If we see, we've got like a housing crisis. Like there aren't enough houses. We've also got, if Biden gets reelected, his infrastructure bill, which is going to fix a lot of roads and crumbling schools and our infrastructure. Steel could benefit a lot from that. But this is not a company I'm familiar with. In the last decade, it's down 19%, but in the last 5 years, in other words, since Joe Biden got elected, the stock is up 163%. Probably people betting on before he got elected that he would get elected and enact an infrastructure plan because he was talking about it during his campaign. And then after he got elected, a lot of his infrastructure bills did get passed, and we are seeing infrastructure get fixed. So it's no surprise to me that the stock is up. They do not offer a dividend. But outside of that, I don't know too much about this company. Cleveland Cliffs. So their 1 year price target is $14. It's down 27%. But I think that all their price targets were when the stock was at a lower price. So Cleveland Cliffs started last year. in the 16s. It got up into the 20s. It dropped into the 14s. It's hard to say, but my feeling would be that these $14 price targets and $18 price targets, when the stock is now 20, were previous higher price targets. The other downside to this Cleveland Cliffs company is that there are only 2 analysts covering the stock, so there's not a lot of interest in this one, at least from the analyst perspective, which is only a small part of what I factor in. If you go on my website, which is kennethsuna.com, and you click on the menu, which is on down here on your phone or up here on your computer, you can download my free fundamental analysis template, and you can go over the earnings of the company and input all the data. It's clickable, and you can have all the information all on one page. Let me see if I can find the one that I did the other day. This is what it looks like. Somebody asked me to compare Open Door to Redfin. This is the template that's on my website. Everything here is clickable. So I was able to input all this data, and I was able to compare it to Redfin, which is another obviously company in the real estate services sector. And I could compare everything: revenues, debts, free cash flow, blah, blah, blah. And it's very useful, I think. And you don't have to compare it to something. You can just do Cleveland Cliffs and just run the list down here. Or maybe there's another steel company you're interested in. You can put it next to it and compare them. And if you're saying, well, I don't know where to find all this stuff, don't worry, because at the bottom of the guide, there's a YouTube video that'll walk you through everything, and a website link here for tip ranks and Seeking Alpha. So everything is here that you need. It's on my website. It's just kennethsuna.com. And that is what you need. Let us switch back now to me. Hello. Christian, do you own any Costco? No, I don't. Costco is a company that I wish I had purchased years ago, but now at these levels, it's $660 a share. So what would I be getting? 2 shares, 10 shares? Even if it went up a lot, I feel personally that there are better investments out there that I could have bigger returns for that cost of the investment. So I'm not anti-Costco. If I owned it, I'd be very happy and I wouldn't be selling it. But at $660 a share, now it's $670. Oh no, I'm sorry. It's $652. It's $652. It's just too expensive for me to make a worthwhile investment. But I love it. Would you ever buy a share of Berkshire Hathaway? Yes, if I could afford one. One share of Berkshire Hathaway is $543,933.65. $500,000 for one share. If you cannot afford one share of that, you could just buy their B shares, which are BRK.B instead of BRK.A. Berkshire Hathaway Class B shares are $358 per share. I'm a big fan, but I cannot afford one share. No, I'm not a Biden guy. But he's better than the other guy. Margot, agree, thank you. What about Rivian? I like Rivian and I own Rivian. There's something bad came out today. Let's see here. Rivian shares are trading lower after the company reported delivery and production figures for 2023. I guess they didn't have what they wanted. And by the way, just talking about someone's infrastructure plan doesn't mean you're a fan of the person. It's just stating a fact. You can not like him, but like certain policies or think something is good. Let's see. Rivian. The company produced 17,541 vehicles and delivered 13,972. Now, I think this is good news. You remember last year, they couldn't make enough cars. They had too much demand and not enough cars. This year now, they sold, let's just round up and say 14,000, and they have 17,500 still sitting on a lot. Maybe that's also bad news because they're not now being able to sell those cars. But first it was bad news because they didn't have enough cars. Now it's bad news because they have too many cars. The delivery quote, so they were estimated to bring in, they were estimated to sell, let's see here. Their own figure was that they were going to sell 15,564 cars. The analyst's estimate was that they were going to sell 14,430 cars, and they sold 13,972. So on their own estimate and Wall Street's, they came in well below. However, for total, that was just for the quarter. For all of 2023, the company produced 57,232 vehicles and delivered 50,122, which did exceed management's full year guidance of 54,000 vehicles. So the more I'm reading, the more this looks like good news. It says that it exceeded their guidance of 54,000 vehicles. They produced 57,000, but they were only delivered 50,000 of them. I think, honestly, if there's a recession or if people are concerned about money and they're going to be cutting back on their spending, cars are usually the first thing that goes, which could be making it a rough year for Tesla and a rough year for Ford and a rough year for Rivian. Possibility. I like Rivian. It's a speculative part of my portfolio, so I'll be adding more to it. Scott O, thank you for the gift. All right, everybody. I'm going to wrap this live up here. Duncan says, Neo, Neo is it's a Chinese company. Let's see here. It's $8. It's down 6% today. Last year, it was down 14%. In the last 5 years, it's up 30%. It's speculative. It's high risk. I probably wouldn't own it. Forex, it's just too risky, too volatile, and I never got into it. If you day trade, what are you shorting today? Anything? No, nothing today. Billy Kardashian says TSLY. I have a video on TSLY in my playlist, on my covered call playlist. Like we were just talking about, if cars take a beating this year, Tesla stock will come down. The premiums will be less lucrative for TSLY, which could bring down the fund's performance as well. So could be a rough year. Duncan, let's say I invest $500 a month. Is it better to put it all into an S&P or into different growth stocks? It's a personal choice. I'm not a financial advisor, and I'm not your financial advisor, so I can't tell you what to do. One option is to do a split, $250 in each. If you think this year is going to be rough for tech and strong for dividends, then you could go and add SCHD as well, a third dividend, a third ETF to that list, or S&P 500 to limit your downside risk, since S&P 500s have a lot of exposure to tech, but not a crazy amount. 29% tech, 12% healthcare, 12% financials, 11% consumer cyclical, communications 8%, blah blah blah. So it's still the heaviest is tech, but they have a lot of other sectors in the fund. Unlike something like VGT, which is 99% tech, but I cannot tell you how to invest. If you're investing for the future, it's picking individual stocks comes with a little bit more risk, which is why I like the ETFs. The Axe for Tesla says that it's headed for 150. Yikes. All right, everybody, it's 11:01. I'm going to wrap this live up because I want to download it and put it on YouTube, so I don't want it to be too long of a live. But thank you for watching. Subscribe if you have not already done so. Go on my website. It's kennethsuna.com. You can download the free template there. Download my template. Download my guide. Thanks for watching. Happy New Year to everybody. Let's make this the year that we really focus on our investing. For me, I've already talked about this. I'm going to be dumping my money mostly into dividend stocks, and I'll reserve some capital if tech gets hammered because I'll be buying like crazy if it does. All right, everybody, Happy New Year. I will be live again on Tuesday. Oh, no, today is Tuesday. I'll be live on Thursday at 10 in the morning and Sunday at 10 in the morning every week. Thanks for watching. Happy New Year. Bye, everybody.